Hello, this is Dave, the Hound, and I've got the Wolf with me. Then welcome to Equities Story. This is just a general shared advice and not personal advice. Welcome, happy Monday. Is that such a thing as happy Monday? Anyway.
Yeah, but you know, I'm really disappointed you haven't mentioned that how smart I look after I've returned from Europe. This is why you have to send me overseas a few times, Dave, because
Yes.
I get my wardrobe updated and look at me.
I
So
know
smart.
the $2 wardrobe. It looks bloody amazing, to be honest with you. But it's amazing what you can buy in Poland, in the middle of the outback in Poland, isn't it? For next to nothing.
Exactly.
Is that an Armani ripoff? That one, Wolf?
Well,
What
it's
is
not
it?
an Armani, but it is another Polish designed and I think made garment from a Polish shop. So I tell you what, that was
What's
my
it called?
little thing. I think it's called Medicine. This place. So if I'm wrong, someone knows. Oh, Medicine is made overseas, but definitely it's Polish because I had to read about it. One of the things I decided to myself, I'm going to buy anything in Poland, it's got to be Polish. Otherwise, what's the point?
Well, we can tell it's Polish because who else would put those colors together?
Thanks.
What's any of that blue and
there had to be some sort of a.
Anyway, I can't talk. As you can see, I've got a nice grey shirt matching my grey hair.
Yeah, exactly. That was boring.
I'm trying to color code myself as an old man. All right, Wolf.
Yes. You're changing your tune, Dave, I have to say. So I am so excited that you are changing your tune because you're going to join the fundamental side. I like it.
Well, this is what I'm thinking, Wolf, right?
Go on. Tell everyone.
Well, we've been calling this market a sell all year, right? And I still think we're going to have one or two shocks over the next month, and we could have one or two stronger moves down, or we could have some, just like maybe 1 week where we have a shock to the market and we do come down, we spike down to 26, and we come back up again. Okay, I get that, because this war is going to get much worse in Europe. I'm expecting. I don't think. He's got other things than just nuclear weapons. He's got some bombs that can flatten Kiev if he wants to do it. They're not nuclear. We've got the elections coming up in America, where I think you're going to see the Democrats want to have a win before that. I just see it. There are a lot of issues, but what has changed for me,
yes,
is the horrendous state of the bond markets and the pension funds around the world. And this is the issue. And again, we're going back to problems around the world. We're going to all this government issues, governments around the world in massive problems with debt. You look at the issues in the UK, in Europe, in America. At the end of the day, I think it's so bad, the situations with some of the countries in the world, there's so much in debt, to actually look at the bond market. The bond market in 1987, but the market crashes, everyone goes to bonds. In 2000, the tech crash happened, everyone ran to bonds. 2008, run to bonds. Are people really going to run to bonds in this world that we live in, where I think a nuclear war or a serious war just gives a lot of countries excuse to maybe have an issue and not pay their money back. So you've got high inflation around the world. You know that if your money's just sitting in cash for 2 years, that cash is going to become worth a lot less. Surely, Wolf, the market has been sold off. We've been negative with the market. I'm not saying every stock, but stocks on low valuation, stocks trading on P's of 6, 7, giving dividends, with long-term growth stories that are good companies that have got plenty of cash. That is the time we have to start looking at these stories, and we have to start nibbling, right? And you know what? We saw, for a ridiculous reason. So Friday was really interesting, and you're looking at human nature. The New York Times, what the hell do they know? They come out and they tell the whole world that they've spoken to some people in the Fed, and guess what? They're going to start, the interest rates, they'll pull it back. They'll pull it back. It was an absolute rubbish article, right? Well, I'm not saying rubbish. It was obviously a good article, right? But it was, when I say I don't believe that article so much really reflected what the big bosses in the Fed are
What
thinking.
the reality is.
Well, yeah, but the market wanted to go up because people want to go into stocks, because stocks are a safe haven now. So this is my question for you. I'm out of my water here, because this is not a trending market, but for the long-term investor, right? The nibble. So this is fundamental. Surely, Wolf, surely, the Microsofts of this world, which, I mean, I look at Microsoft, which was trading as high as 340. It's down to 242, right? It's down around 30% off the highs. It's come down. It's hit support. It's bounced up. For the long-term investor, the Microsofts of the world, it's got to be in nibble territory. The Amazons of the world have got to be in nibble territory. The Googles of the world. I mean, Google has found some support on the trend line down here. This one's down for 50% off its highs. It's got to be in nibble territory. And I'm not saying you go from, like, say 30% in stocks to 80% in stocks. I'm just saying you maybe go from, if I had a portfolio of 30, I'd maybe go to 50. I just want to have a few more stocks at the moment. I'd want to start nibbling at these sort of prices. Even though I believe that we are going to have another spike down, maybe a little spike, a quick spike down, I don't think it'll be long, and I think it'll bounce back up. We have to start looking for the opportunities, and that's my sort of theory at the moment, where I'm looking at these markets around the world.
Well, welcome, first of all. Welcome to the fundamental side. Thank you very much. It's taking a little bit to get.
Well, we got people now in Equity Story love your technicals more than mine, Wolf. So I just And I
agree with you, Dave. There's a pent-up demand. There's a pent-up demand to buy quality stories, right? And the market's been waiting for 6 months at least. On tech stocks, probably 12 months plus, right? So there's definitely any sort of, like you saw the article, right? Any positivity, people are waiting for the catalyst to jump back in, and that's why I had a bit of a rally. Whether, that carries through, probably another question, probably not, but I completely agree with you. You gotta be selectively nibbling on some stuff here and there. So, because we're probably never going to pick the bottom. And if you want to participate in this great sell-off that we've had over the last 12 months, because like I said, this probably happens once every 10 years, right? Yeah. So you go to yourself, okay, I might do it once a month, have a little nibble on some of these great stories, your Macquarie's, your GMGs, and so on, the American stocks, like you've mentioned. So I'm very happy and comfortable with the strategy. And of course, I probably wouldn't go to 100%, like you said. I'd be just doing it, with some sort of a small increments over the next few weeks, months, so to speak. And if we see a strong catalyst, markets are turning, then we're going to go full 100% in, right? So I'm completely with you. I've been, reluctantly, because my mind says, we're going probably down like you, but I don't mind suffering that short-term pain a little bit, because when you think about it, right? You're as an investor, you think to yourself, what am I doing? But then you go, what are the big boys doing? What are the big pension funds, like you mentioned, doing? What's, say, Mr. Berkshire Hathaway doing? I bet you they're accumulating. They've got a lot of cash, but I bet you they're looking at some stocks and probably looking at some purchases in the near term. So we gotta think big. We gotta think long term and see what's, because you're not going to see, like, one example, right? ORA. I spoke with you about this morning about it. So there was a little, I think, on F1 Arena, they're talking about, because they released the update, and I will talk about it in a sec. But they're saying that they haven't traded on these PE for 8 years, since 2014. So you've got these sort of opportunities right in front of you. If you don't take them, you're probably going to regret it down the line.
And so you've got ORA trading on sort of the cheapest multiples for 8 years.
Yep.
Giving a dividend of 5%.
Mm-hmm.
So a stock where you've possibly got some decent growth in this story moving forward.
Yep.
No
it's
brainer.
Almost like I don't want to mention it, Dave. Also almost like a no-brainer, isn't it?
I know, I just said it.
great management. You know, you've got a little bit of growth in there. You've got a nice dividend. It's almost like a pillar of a building portfolio in these sort of times. This is what you'd be looking at. And you know, ORA is probably just one example. There's a few of these around. I mean, tomorrow I'm going to make a top 10 list of the stuff I'll probably be nibbling at the top end of the market, because there's a few that I'm thinking to myself, you know, I wouldn't mind having some of this at these prices.
Well, you know what? It's not trending, but I'm going to give it some technical support. ORA, if I put on a monthly chart, the only time it really had a dip down for a few months was the COVID crash in 2020, where it broke that $3. If you actually sort of take that out completely, there was always support at $3, and there was support last month at $3. So it really is come down, sitting on some nice support at the moment, Wolf.
Yeah, but even if you just go back to the other chart, I just want to mention, because you know I'm a super chartist now. But see if you go for the monthly, even if it goes to 250, because it's also a bit of support around 250, I'm still happy to, you know, it's only 50% down. So 50%, 50 cents down since 3 to 50. You have another nibble around these levels. So you know, if there is another bad spike, like you said, and it takes down ORA with them, so ORA might not, you know, might trade at P's that they haven't seen for 20 years. That's fine. You have another nibble at 250, but long term, it's probably going to be higher in the next 3 to 5 years, whatever you buy at today's prices.
Well, you think also that dividend of as long as
Very
it's
attractive, exactly,
and it will support the share price.
Correct, as long as, of course, you know, the results warrant it.
So the other day, I want to reiterate this. We spoke about JLG as a nibble around here if it goes lower. You know, this is take advantage. ORA, we're going to put that on today. It's a nibble. Start accumulating around this sort of level. Yeah, for the long-term investor. Number one on the list has got to be Microsoft. Yeah, it's got, you know, 30-40% down from the highs. It's a nibble.
Yep.
Apple is another of one that's, you know, it hasn't gone down so much, but you know, that's you know, it's come down. You could have a look at Apple. You've got Google. Okay. You've got Amazon. I'm talking about the bigger stories. I think you've got Berkshire.
Quality story, yeah.
Yeah, quality stories. You've got there's ideas for all our members out there. If you've got that 3 or 4, 5 year view, I think around these prices, you start nibbling. If it goes low, you start nibbling a little bit more, because this is a different world. Like I said, it's you know, listen, Wolf, me like you, we read everybody. I read all these different analysts' point of view. And the ones that make sense to me are the ones that are talking that the fact that saying, no, this isn't an 87, this isn't 2000, this isn't 2008. This is mass inflation around the world, mass problem with governments, possibly war. Stocks are, as they say, the famous saying is, Tina, there is no alternative. Right, I know there is cash, which we talked about, but if you've got your cash in the bank for long term, that value of the cash could be worth a lot less.
If you've got, say, you know, you've got your interest you're getting at cash is 5% and the inflation is 10%. Yeah, you're not doing greatly, are you?
Precisely, right? So you know, looking at good companies that are paying you, where you're you know, what do they say in these sort of times of high inflation? It's all about stocks, property, and gold. Right, those are 3 asset classes.
All right, look, I'm glad you've moved to the light side, not, you know, going from the dark side, because it's very difficult to get people out of the dark side.
Well, I'll get more excited when they're trending, obviously, and then everyone. But you know what we're looking for as a technical analyst, we're looking for trends, and the trend, and what I'm trying to say, the normal trend of running to bonds in times of crisis is not going to be there at the moment.
Yeah, no, absolutely. And the thing is, this is when you change over. So you take that hat off and you put on that fundamental hat on, and you're looking at something completely different. You're looking at long term. What do you do when you've got an opportunity once in 10 years? Yeah.
Right. Okay. So let's start focusing on these stories, and I'm going to reiterate it. ORA for long term is a buy today. Microsoft is a buy today. Amazon, Apple, Google, Berkshire are a buy today. Goodman Group is a buy today. JLG we said is a buy the other day.
Yes, we did.
And you could look at also other stories like OCL, start nibbling. These are quality stories. They're all stories that you want to start.
Tomorrow I'll come up with an official top 10. And RI will be on there, no doubt. So you can start nibbling on that, and GMG will be on that too. You can definitely those too. So I'll add another 8.
Wolf,
Yes.
we need time for cojones, my friend.
Oh, I've always had them, Dave. They were small and fragile.
All right, now we've talked about the market and we're in a happy mood, happier than we've been for about the whole year.
Yeah,
because we're now believing in stocks a little bit more than we were.
You've made my day already this morning. It's great.
I hope we're right.
You've crossed the right threshold, my friend.
So tell me about
the announcements. Tell
me about the announcements. Now,
all right, so let's start with
CRR, which had a good hit.
Yeah, he did. And funny enough, I just went past because I actually thought they were talking about copper. I'm looking at it, and it is lithium, 18.45, 2% lithium, Mavis Lake.
Yeah, Dave, lucky somebody understands fundamentals.
I'm glad, exactly. I'm glad we've got a commodity fundamentalist.
And that's up 4%. And GLN that had some pretty average.
Well, no, don't say it. But the thing is that what they see, I need to have a look at these because what I'm going to do, I'm going to have a look at these, do some comparisons between some of these things. So at the moment, I am thinking that maybe the quality of GLN's deposit is not as good as some of the others, but they did, I think, double, or triple their resource. So I mean, that's obviously what the market is buying, right?
Yeah. But okay. So when you're looking at lithium, you've got you always say you want to be over 1.2. So you've got something like GLN, which is around 0.8. How does that affect their costs of production and?
Look, we got to be very careful here, Dave. We're talking about hard rock and brine, right? So we're talking about very different here. So when I'm talking about the hard rock, 2% and over 2%, right, is high grade. Over 1.5% is high grade to me. So between 1 and 1.5 is decent.
Yeah.
This is very different now. Now we're looking at brine. So I'm not going to compare it to the 1.5 and 2s. This is 866 mgs, I think, per liter. So very, very different scale, looking at completely something different, Dave. So I'm not going to even attempt to it because I'm thinking off memory, I think 1,000 was somewhere where you'd be looking at as normal, right? So that's why I'm trying to figure this out. I'm going to do some sort of calculations over the next week, and I'll get back on Monday and talk about where some of these lithium plays, because there's every second explorer out there's now doing lithium. So I think we need to do some sort of at least a guide and pinpoint and go, okay, well, these guys are coming in at 800, average at the moment is about 1,000. Is it good? It's okay, type stuff.
Yeah, it's funny though, isn't it? GLN, like you said, they've doubled their resource at least, and the stock's only up marginally.
Yeah, well, what's it up today?
17%. 17%.
Yeah, that's not remember, Dave, some of these things are just traders out there, right? Buying on the news, on the spikes, and they're probably going to sell down within a week.
Well, that's what I'm implying, isn't it?
Yeah, that's exactly right. Yeah. It's probably what's going to happen, and it doesn't need much news, and you don't even have to understand it to just get on board to have a quick trade and get off.
No, but something like CRR. So anyway, you're going to have a look at these lithium plays and get back to now. AV1.
Yep.
Well, very strong. So they're trading at they were trading roughly around 8 cents, and they raised 3 million at 10 cents. You don't often see that, Wolfie.
Hat off, Dave. Hat off. I think you really don't see it. I mean, probably 1 in 100 you see that, right? So this is a very rare occurrence where you see a company raise money above its share price. What does it tell you? It tells you that obviously the company's doing okay. It also tells you that there's a strong demand about the future of the company, and it also tells you that this is bloody cheap. Right? So that's what the three things I think the market's here telling you. And it's vindication that, you know, the story is really good.
Right. Well, we've liked the story for a while, but it's been below trend. So are you a buyer now of AV1 on that on raising 3 million at 10 cents?
No. And I'll tell you why no. It's still too early because we're still looking at the fundamentals, right? So nothing's changed there. Even though this is a great tick in the box, you've got to be very happy. Well done, management. All these sort of things, fantastic. You know, less dilution, of course. All these little things, great. But I think in this current market, you know, this is still a high risk because it's, you know, we want to get the 10+ million in revenues, and we're probably only going to get to about 5 this financial year, maybe a little bit more. So I still think they're a little bit behind where we wanted at, although they, you know, they're ticking boxes, of course, going and growing. So as a maybe a little bit more conservative investor, I'd probably say I'm going to wait for another maybe 2 or 3 or 4 quarters and see where they're at. I mean, this is a nice spike for sure, but it's not convincing enough for me to get in.
All right. Wolf, PLY PlaySide. They're just sort of holding up, and in some ways not bad price actually in a tough market. What do you make of their announcement?
The quarterly was okay-ish. That's probably the best you can say. It wasn't fantastic. It wasn't bad. It was okay-ish. We knew that, you know, they've had that remember they had that one quarter that was just outstanding, and they're going to revert to the averages, and they have done that. But I still like it. I still think they, you know, overall they are growing and they've got a lot of potential. So it will be something that I'll probably get back into it, but not now. I think it's right now, it's probably going to go sideways for a little
while. DRE. What did you make of that? They got some very strong drill results, 54 meters at 2.07 TREO.
Yeah.
Were you happy with that?
Yeah, I was. I mean, you don't see, I mean, I think they've also mentioned the previous drilling results, right, which were pretty high grade. So I think anything over 2% for me in rare earth oxides side is very, very, very good. There's not many things around like that. Anything over 4% is high grade, right? Anything over 6% is probably ridiculous grade, right? So 2% I'm very happy with. So well done to DRE, and I think this is a nice little pivot, and I think maybe there's a trade here if there's more drilling results to come.
Right. Are there more drilling results?
And that's what I'll probably have to check. I'm not sure.
91 of 120 holes reported.
Okay, so there's about 30 holes to go.
Yeah. So would you buy it?
With a very tight stop, yeah, possibly.
Okay, so what, you buy it? Buy at 11.5 with a stop
10.
just under 10.
Yep, perfect. And you know, if you can get 1 or 2 cents out of it, take it.
Okay. So maybe because this stock you said could double, triple.
Yeah, absolutely. I mean, the potential is there, but you know, in this current market, you're happy with the small little trades here and there. Don't be greedy.
Yeah, you could have a stop just under that 0.89. I mean, you know, it's held that trend beautifully, hasn't it?
You could.
Keeps on delivering. I like that idea.
But there were promising results.
So high risk trade, but it's certainly on. COV.
Yep.
Dividend. Okay. Dividend play came up with an announcement on Friday.
Yep.
You're still happy holding that as a dividend play?
Happy hold for dividends and growth. Nothing's changed there. Lightly traded, but hasn't disappointed.
KFM, Kingfisher. Good looking chart, sort of poke its head up. What's all this one about, Wolf?
Again, rare earths, but this is, I think, it's definitely a little bit earlier than DRE. DRE has been drilling. These guys are still doing the preliminary exploration type stuff. But, you know, from what you see, like the rock chips and stuff, you know, and I'm not a big fan of rock chips, of course, but at least there's a lot of it. And, you know, they're coming out with some high value. So I'm just wondering if they're going to drill it, what they're going to come up with. So at least you've got a bit of smoke is the thing.
I mean, these rock chips are, you're talking higher than
up there.
I mean,
correct.
These rocks themselves would be worth a fortune.
Yeah, exactly, to the Chinese.
But,
so that's what I'm saying. This is smoke basically, right? So if there's smoke, hopefully there's fire. So definitely one to watch.
Right, looks interesting. Now we've got S32. What did you? They're holding up. I mean, not too bad. What did you make of the announcement?
I think on the results, you'd be holding still if you're still in this. Maybe thinking to yourself, pays are okay, dividends, reiterated the guidance. So fundamentally, tick, tick, tick. I'm holding if you're in it, of course.
Okay, OZL takeover offer, is that still happening?
Well, BHP needs to come back to the table because remember it was rejected by OZL. BHP, I think today in the AFR said, yeah, we're interested, but it's not is we have to have it. So they're trying to obviously put the emphasis of don't expect another bid, right? It has to make sense, which is, of course, they're trying to play their cards pretty close to their chest.
Okay, so what would you do if you're in that? Because this was trading on its lows.
Yeah.
It's gone down with maybe the gold price, hadn't it? And copper not doing so well at the moment. It's had that big move up. Are you a seller of this? I think I am.
Yeah, I would be too. And I tell you why is I don't want to play the takeover battle theme here. And it is elevated levels. I mean, like you said, without the BHP bid, it's probably be back to $20 or even below, right? So
that's what I'm thinking.
Yeah, it is way too dangerous. So I'm taking my profits here.
And VEA, holding that trend absolutely perfectly. Good looking chart. Again, another decent announcement, and it's just the right sector, isn't it?
Yeah, look at the VEA update today was very strong. Margins are going up. The current environment for these energy players is very good.
All right. Anyway, good news. Obviously, you've seen these coal stocks still going. SMR, there you go, guys. We've hit our 290. That was a good little trade that we put on, Wolf, while you're away. I think I'd be taking a profit. We talked about this just running a little bit hard, didn't we, the other day? And it's not coking coal, our favorite, but that was a good little trade. XRF, hot stock. There's still not many stories trending at the moment, Wolf. So, yesterday I went through 2,500 stories. There's still, and that's what, and I think that's what's got me even more excited. And you just think, okay, I get it. It's all sold off. How low does it go? There wasn't too much trending, but this one is trending, and the price action was absolutely superb last week. And I think definitely could keep on going. And again, good to see that XE just recovering very, very nicely. I think that's all we got to talk about, really. That's it, Wolf. We're going to be busy live tomorrow night at 7 o'clock. Did you have anything to add?
No, I think what a great session today we had. So that's great. You gave a couple of ideas. Remember from Friday, people asked me about the top 10 from the reporting season. I think that's still very, very valid in that context that you've just talking about, right? So if you are looking for those stocks, look at the top 10 that we talked about on Friday, except maybe PLS, which is obviously doubled almost, right, in value. But everything else looks pretty good still. But tomorrow I'll come up with another top 10 in a sort of the larger space. Your GMGs of the world, the RRAs of the world, I'll add another 8. And probably following that, by the end of the week, I'll come up with another 10 at the smaller end, the more riskier type stuff that's been shellacked to smithereens that I'm thinking, nah, bugger it, I'm buying it.
All right, good stuff, Wolf. And again, good to see we put on stuff like while you're away. I think KAR is holding up quite nicely, but I think importantly, some of these little gold plays like and I cheated, Wolf. I use stocks that you love, right? But
nothing wrong with that, Dave. It's basically cheating is a form of flattery. So thank you.
We want to trade a good story, not a weak story.
Yep.
But we like the DG. Unfortunately, they did raise money. Newcrest, we like that one while you're away. Again, not really a trending stock, but we had a nice stop loss under 16. Come on, I think it makes sense to get into it. And it's good to see gold just having a little bit of a move over on Friday night as well. And also seeing sort of the Aussie dollar come back to some sort of normality was good as well, Wolf.
Yeah. Agree.
On Einstein's, there was, I think, a few buy signals. Paladin had a buy signal. So uranium, is it starting to heat up a little bit, the uranium sector, Wolf?
Yeah, there was another article I saw that they talk about the uranium seeing a little bit of light because of the Ukrainian issues, right? We just don't know which way it's going to go. So there's a little put a little bit of a spotlight on that space. So not surprising, it's probably going to be still at the forefront of an investment or a punt of some kind, whether the prices of uranium follow and can follow through higher. That's another question, but at least you've got a little bit of a theme that's sort of simmering along where you can maybe make a quick buck or two.
All right, thank you very much, Wolf. Interesting day today, and a little bit to put out on the TradeWatch video. So thank you very much, and have a great day.
Thanks, guys.
Bye bye.